Good day. This is Peter Knipp from Castlestone Management with comments on the U.S. markets for the week ending June 20th. U.S. equities were flat on the week despite the continued conflict between Israel and Iran and a Federal Reserve meeting midweek. Thursday's holiday and Friday's triple witch option expiration added to the week's volatility, but volumes were low. On the week, the S&P 500 and the Dow fell 0.3% and 0.1%, respectively, while the Nasdaq added 1%. Virtually, markets were flat, even with the triple witch volatility. Treasury yields were down this week as investors positioned themselves against a possible escalation of tensions in the Middle East. The Fed meeting Wednesday did little to convince market participants that yields were coming down anytime soon, and investors bought U.S. government debt in a flight to safety. The U.S. dollar index rallied on a safe haven demand and scored a weekly gain of nearly 1%. Some profit-taking hit gold prices this week as the yellow metal hit a one-week low and recorded its first weekly decline in the last 3 weeks. However, gold still remains one of the best performing assets this year. President Trump's decision to delay potential U.S. military involvement in the Israeli conflict with Iran cooled the move in oil prices, but crude prices still finished the week higher for a third week in a row. WTI and Brent posted better than 5% gains on the week. When looking at our charts, keep in mind that it's only the last 5 trading days, not 4 days, because the U.S. market was closed Thursday. Thanks for listening and thanks for doing business with Castlestone. We'll talk to you soon.